Hello, good afternoon. How are you doing? How is your day going? This is OSP Trade, and today I'm going to talk about how to mark out your structure. If you're looking for what to trade, this is the second video of my OSP trading strategy. This second video. The first video I talked about the nature of the market, and in this video I'm going to be talking about how to mark out your structure before looking out for what to trade. Either you want to buy or you want to sell. So there are some certain structures. There are some structures you wait for to get broken. If the structures are yet to break, there is no reason for you to trade. So these structures are what I want to be showing you today. They are very easy. They are very easy to identify. So it's just for you to mark your highs and lows. Take a look at where there is massive move in the market. Mark the move out and wait for the move to get broken. So once the move gets broken, that is when you will be looking for a buy or sell. So that's what I'm trying to tell you. So take a look at, let's make a quick analysis. If you've watched my previous video, you would have understood the nature of the market very well. We have a moving phase. This was a moving phase. You can see moving phase, and this presently that is happening now is the resting phase. This is the resting phase of the market. The moving phase followed by the resting phase. Now I told you when the market is a moving phase, you have nothing. Don't bother yourself trading because you've moved already. The market is moving already and you've missed out on the trade. So it is the next resting phase that you analyze and so that you know what next to trade. So when the market is in moving phase, so if you don't enter at the right place, don't bother yourself trading anymore. So just wait for the next resting phase. Analyze your next resting phase. It is this resting phase that's going to let you know what next you trade. So as you can presently see the resting phase now, if you want to mark out these structures, for you be like, okay, fine, if these structures get broken, I'll be waiting for a buy opportunity, and this structure get broken here, I'll be waiting for a sell opportunity. So you can see this massive move here. Take a look at this middle. You can see this massive move. This is the dictator of this particular resting phase. Whatever is happening here, you will notice that it is going to be in between this massive move. It's going to be in between it. You can see these many consolidations here. It's still falling in between this massive move. So if this massive move gets broken upward, fine, you start looking for a buy position. And if we see this structure, this here, this particular down there, get broken, fine, start looking for a sell opportunity. So until then, just allow the market to be doing whatever it's doing. So this is what I used to use to stop me from over trading, to let me know what I'll wait for. So let's take a look at this. Now take a look at this resting phase here. Take a look at this resting phase, something like this resting phase here. So you can actually see this massive move here. This massive move. Mark this place out. I normally do this on higher time frames, and you mark this do out. Can you see? So okay, take a look at this resting phase here. After this moving phase, then there is another resting phase here, and you can see that this move is kind of very obvious. This massive move in between is very obvious. So it's the dictator. You can see that the previous ones fell in between, and the one in front also, they fell in between this massive move. So that is our dictator. So it's the one that is dictating, or it dictates all the moves. So we mark the two places out, and the low. Can you see the highs and the low? And what happened next was, you see, immediately this high was not broken. Immediately this low got broken. What happened? We noticed a fall of the market. The market sold, right? It's as easy as that. It is as easy as that. As easy as that. So it's as easy as that. So let's take a look at different examples. Now take a look at this. After this moving phase, we got a resting phase here. It's very easy. A moving face. Please, if you missed my previous video, just go and watch. We have a moving face here, followed by what? Followed by a resting face. This is the resting face. This is the resting face. So I told you it is this resting face that's going to determine the next moving face, right? So that's what we have to analyze. That's what we have to analyze. If you want to mark out the structures here now, you mark out this high, you mark out this high, then you mark this low, this low. You can see that this move is the what? Is the longest move. So everything fell in between this move. And what happened if you go to a lower time frame? Go to a lower time frame. You see, immediately this move got broken. What happened to the market? The market started buying. The market started buying. So it's as easy as that. Don't get confused. So let's check V50. Let's check V50. So I'm showing you different examples. So let's take a look at this market. Now the market was at its peak. So and the best thing to started looking for then was a sell market. I told you should only look for sell opportunity when the market has already bought. You can see that the market has been buying for a while. And if you take a good look, so this was a massive resting phase. If you take a look at the structure, so this was a sell pattern, right? But we can't just sell. This market because it's a pattern. We need to mark out our structures. So the best structure to mark here is this particular place. You can see this was the last impulsive move. I understand. Are you with me? This was the last impulsive move. So immediately this last impulsive move got broken, they start looking for a sell opportunity. And that's what happened. The last impulsive move got broken, then the market started selling. It's as easy as that.